Hello everyone.
Hi everyone, my name is Raymond.
I'm Annie.
Yeah, today we are going to do this video to share with every one of you on this topic is do not be priced down by your loan. So Annie, what does you mean that do not be priced down by your loan?
Okay.
Very blur this topic.
Blur meh? Okay.
I'm confused lah.
So you know right, Raymond, typically my clients always share with me, Annie, how come every time I call agent, right, after a short talk, right, they will always ask me two things lah.
Yeah.
How much is your budget nah? Have you done your IPA?
Oh, IPA lah.
IPA, huh? Okay. So typically, agent will ask you, have you done your IPA? Meaning, do you know how much you can loan from the bank? They cannot understand why agents need to ask this question.
So the budget is the price that they can buy lah, right?
To us, we will not ask our client this.
Oh, why? Why is so special?
That's why today we have this session, You must go through with us the short 10 to 15 minutes later on.
Okay.
Because your property price, your dream home that you're looking at should not be only constrained by how much loan you're eligible for.
Yeah, but I buy property should depend on loan. I need to do a loan. If the loan I cannot, for example, if I have a certain amount of loan and that loan I cannot get the property that I want because the property price is much higher, then I cannot buy it.
Yeah, exactly.
Yeah.
So, being an agent, we know the numbers, we run through and all. But being a consumer on the ground, normal buyer and seller, when we tell them your loan size can only buy up to 2 million, then does it mean I can only look at property that is 2 million and below?
Definitely not lah. So if I want to buy maybe 2.5 million, am I right to say that I have to down another 500,000 more into the property so that I can buy a higher quantum, right?
Yes, that is one option, but there are actually more ways to be able to help us to look at how this loan can well facilitate your dream home. So why am I saying this is because do not be controlled.
Tied down, you mean?
Yes, do not be controlled with your property selection just because, right, I only have an official IPA of XXX amount.
Okay.
Yeah, but of course, definitely, you don't come to me and tell me, hey, man, I know income, I'm going to buy a property there unless my pocket is a lot of cash. If not, otherwise, it's tightly related. But we should not be controlled fully by this factor.
So today what we are trying to share with everyone is, can I say that we are sharing some financial techniques to help our consumers out there to get a dream home. Even though you think that you're tied down by a certain loan amount, but there is a bit of financial technique to help you to increase your IPA or your loan by a substantial amount to get the home that you want. Okay, so I think the disclaimer that we are having here is based on whatever we have done from all the cases over the years, our experience on the ground, and of course some of the analysis that we have did with all our clients. Of course, it's successful cases. That's why we are doing this video to share with every one of you here. So if you think that you are in this same situation after watching our video, feel free to contact us, and then we'll definitely do our best to help every one of you out there. So maybe you want to start explaining about this thing. What is this about?
Okay, so before even going to a banker, things like that, right? We have to first understand how the loan actually comes about.
How actually the bank calculate my loan amount? Based on what?
Correct. So looking at this chart here, right, it's actually our standard calculator.
Okay.
And all the numbers can come out like in one click.
Okay. You mean our calculator lah?
Yes. So it's a standard formula that runs with this calculation. Typically, the banker will always ask us.
This is based on what model that they calculate this?
I want to highlight something for you all to take note. Typically, they will ask us the standard set of questions. Our age.
Yep.
Because our age actually determine how much loan.
Right.
And then the next thing is they will ask us, are you working or are you self-employed? That's where they want to know monthly income, how much they should punch in. Okay, so self-employed and employed is a different income status and is subjected to some haircut.
30%?
Yes, 30%.
Alright.
So let's say today I'm a business owner, but because it's a self-employed, I earn 100k per year, then I will need to first undergo a haircut. Meaning,
so that means I can only use 70k to do a calculation.
Oh yes, correct. Then the next thing is our obligation, because your income is your weightage, but then there will be some obligation that you already have to be tied down every month. That is going to bring down your loan. So another question we will ask will be like, are you on any loan? The most common loan is car loan. Some people are on study loan, some people are on renovation loan. So any forms of loan that you actually engage with the financial facilities, then it needs to be declared lah.
Okay.
Alright.
Okay.
Then next thing, Since we are on a video, right, I just want to share with you all, this is something very, very interesting. We will always ask our client, may I know how many credit cards you have?
Why? Why need to know how many credit cards?
Exactly. So, commonly on the Crown, clients will always feel that, why do you need to ask me this question? I don't owe
Very sensitive.
any money.
Very sensitive.
Don't owe any money, ma. So I declare as 0 credit card. But actually, no. Because every credit card itself, right, it means that you are able to spend before even paying for it, right? So is it considered a liability?
Oh, like that also considered liability?
Yes, even though you don't owe the bank any outstanding.
Oh, so how does it calculate for, let's say for example, today I only have 5 credit cards.
5 credit cards.
So what's the liability?
Standard tabulation per card is $50.
Wow, 5 credit card means my liability is $250.
Yes. This liability 250 is actually quite a lot. Can affect your loan size by maybe 100K.
Oh, wow.
Yeah, it depends on our income
So
level. So if you're someone like the 周润发 like that, you have tons of...
You think I want to sell? So I think after watching this video today, right, I think a lot of you have to cancel most of the credit card. You only use one, so they will cut down your liability.
Yes. If you are planning to take a housing loan, that's something you can consider, can cut off already first.
Okay.
Alright, then here, this is the part.
What's this interesting?
Can you see this little cute thing? It comes in 3 pockets.
Oh, yeah.
Yeah.
Different color one.
Your screen probably may not be able to capture so clear for you. Here, you can see we have one blue pocket. So how much loan you can get also depends on what property we are going for.
What property are you going for? You mean a different class of property, you mean?
Yes.
Okay.
So let's say, for example, we plan to buy an investment in the private market. Then my loan size is different. Even though I base on one age, one income, same liability. For private, you can see this single portfolio, right? For private, the loan size actually go up to here.
Oh, wow.
Yeah.
That's mean I can loan about 900,000 for a private property, right?
Maximum loan.
Maximum loan.
Maximum loan. So regardless, today you want to buy at 1.199, 1.2 million, you want to buy 1.5 million, you want to buy 2 million. Based on your income, this is your maximum loan.
Oh, based on just now the 8,000 income, 30 years old, okay.
Yes. Okay. But if, let's say, you are buying a $1 million property, then you won't be able to get this full loan because it's only maximum at 75%.
So meaning to say, if I want to buy anything below 1.2, it's not a big issue for me, right? I just have to use the 75% the loan and then the 25% is my down payment.
Yes. So these are the standard tabulation. Standard, See the green pocket here? If let's say today it's not a single person, it's a couple with this income and they want to go for an EC.
EC, the brand new EC, you mean?
Yes.
Okay.
Yes, brand new EC. Then their tabulation will be totally different. Can you see now? It's the same income status, same age, but our loan size have dropped.
Wow, why the loan drop of more than 50%?
So here is a clear standard differentiation. If we are going for private properties, it's under the TDSR ratio.
Oh.
And that takes 55% of our income. So today, let's say Raymond earns 10,000. Then under the TDSR, right, he's someone who earns
5,500. That means the bank used 5,500 to calculate my loan.
Yes. So based on 5,500, you'll be eligible for this.
X amount.
Yes. Right. But however, under the new batch of EC is MSR, mortgage service ratio.
Oh.
And mortgage service ratio, they only give you the creditation for 30% of your income.
30% of my gross income. Means if I earn 10,000, 3,000 to calculate.
Yes. In this MSR, you are considered $3,000 income.
So that's why the loan drops at quite a fair bit. Yeah, reduction of 25% down. No wonder.
Okay, so on and so forth, exactly the same. It will work for
HDB
loans. So it's also under the MSR ratio.
Okay.
A slight differential. Yeah, so this that we discussed, the 3 above, right? This is why you have all the different numbers and how the loan is being determined by the bank.
So now what we are going to share, right? Of course, is today if we want to buy maybe a 1.2 million or 1.3 million property, but in the scenario that my income is only 6,000. Of course, 30 years old, I just take this example, right?
Yep.
So based on the bank TDSR, just now Annie have explained, right? Actually, my loan is only 674,000 if I earn only a 6,000 income. And my max purchase here, as you can see, is only about 900,000. Meaning my max loan is already 674. I max out already. So today, if I want to buy a property of 1.2 million, so I minus actually my max purchase is 900,000, right? There's a shortfall of 300k. Wow, that's quite a fair bit. So meaning to normal consumer, they will always think that, hey, wow, like that the shortfall I have to pump in another 300,000 into the house.
That's a lot, including my down payment.
Yeah, where got so much money?
Ah.
Then of course a lot of the consumer they will give up. Yeah, not possible. Very, very difficult. Yeah. Maybe I have 100,000 to spare, but I don't have 300,000 to dump into or put into the property. So always the case that the consumer will what? They will just walk away and they will just feel disappointed and not able to get the dream home that they want, right? So I believe there are definitely buyers out there like that, right? So what can we do is there is actually a financial technique called pledging and unpledging. Hey, you heard before, no?
Definitely, I heard. We both of us definitely hear before. But for you, that is in front of the camera, this is where we really want to share with you. But of course, these are some of the case study numbers that we bring out. Individual of us, we all have different income level. We got different commitment level. But don't worry, everything is one touch away.
Yes.
Yeah, and there's no obligation. You can always check with us.
Yes. So just taking a very generic example, right? Of course, later we'll show you a case study as well. So based on this generic example, right? Okay, before we start to explain, right, what is pledging and unpledge? Because some consumer might not have heard of this. These two words are financial techniques, right? Used by the bankers, right? If you tell them you want to pledge or unpledge, the bankers definitely will know this. So pledging means, right, I will put a small amount of money into the bank, like a fixed deposit. For how long? 4 years.
Yeah, 48 months.
Yeah, for 4 years, 48 months. And what can this pledging help you? For example, today I want to buy a 1 million property based on this 6,000 income.
Yeah.
Actually, I can only buy up to 900,000, right? So how much I need to pledge to the bank is I need to put in 33,000 into the bank for 4 years, and the bank will help you to increase your loan from 674,000 to 750,000. That will help you to buy a property up to $1 million. So meaning instead of you putting another 100,000 into the property to buy from 900,000 to 1 million, right? Technically, you can only use 33,000, put in the bank for 4 years. 4 years later, this money will come back to you with some interest, right?
Yes, fixed deposit.
Like a fixed deposit lah. So you don't have to really pump in the 100,000 into the property just to buy the property that you want. Yeah, I think that is a very good technique. Yeah, technically you save quite a fair bit, so you don't need to put in 100,000 minus 33,000. You only put in 33,000, you save 67,000.
Yes.
Correct?
Yes.
But if you, on the other hand, you say, okay, I have some more money, I can put in 100,000 into the property to buy the property that I want, but I don't wish to put my money into the bank. I don't want to lock my money in the bank for 4 years, right? And I have the money, but I also
Don't
need
want to lock the property because it will be locked in the property all the
yes, until you sell, right?
Yeah.
So there is the other technique called the unpledging, unpledged amount.
Unpledged meaning?
Unpledged meaning I just have to show funds to the bank that I have this amount of money while applying the loan, and before the loan is being dispersed, I have to show 2 times. Okay, so you need to show the bank you have this amount of money in your bank.
2 times.
2 times.
2 times.
Yeah.
Oh, so how I show?
The same way you apply the loan, then in your bank statement you must have this amount of money inside.
My bank statement, I have this amount.
Your own bank statement, because you're going to buy the property,
Okay, so first time I show is when I
apply the loan.
Okay, apply my loan.
Correct.
So I confirm this property I like already. I have this amount in my savings account. I show the banker.
Yeah. Because when you apply the loan, they saw this amount, then they will increase from 674,000 to 750,000.
Oh, that is really very that's good.
Yeah. So before the sales completion, right, then you need to show one more time that you still have this amount in the bank.
Complete, that's where the bank need to help me release the money, and
this was the money for
release the money to the seller.
So this is called unpledged. So you don't have to lock the money in the bank, neither do you need to lock your money into the property. But you can buy the property that you like, even though there's some differences from your max purchase to the one that you want. Yeah. So how you want to calculate this unpledged amount is, as long as you know this pledged amount, right, you just divide by 0.3 and you will get this unpledged amount.
So in case you're wondering, right, how come we need to do this pledging and unpledge? It's the same thing today if I have income. It serves as a credential for me to tell the bank, let's say remember it's the bank, the bank see that I have this income, I have this paying power to do the mortgage, then they loan us the amount of money. So if let's say I don't have, then I need another source of credential
Yeah.
to prove that, hey, actually I'm okay one.
Able to afford lah.
Yeah. So pledging and unpledging, it adds on to your loan to power up your loan as a credential.
Yeah, enhancement lah.
So it's never about like, hey, am I very silly or not? I go and pledge the money, put inside the fixed D, then the interest so low, But it actually helps you to be able to leverage 100K more, right? From 600 plus.
Yeah, just using a 33,000 in this scenario
Yes.
to represent the 100K down payment.
Yeah, correct. So it's actually very beneficial.
Actually give a lot of consumer more hope.
Yeah, number one, more hope. Number two, you also have more flexibility.
Yeah.
Instead of tying in so much money to the property, you can have the flexibility to have the cash flow, do other form of investment. Or, yeah.
So why not we just share one case study with them? Okay, come. This case study. Okay, for example, same thing, a buyer 30 years old, 10,000 per month they earn. The max loan is 1.124 million. Max purchase price, if I base on this loan, is about 1.5 million. But now, this buyer want to buy a 2 million property.
Wow.
So you see this difference already, the difference is 500K.
It cannot. Normal consumer, they turn off already.
Well,
People say, why not you look at something cheaper?
I earn 10,000 a month. You ask me down another 500,000. Wow, I need to save for how long? I think cannot. I cannot buy already. Very hard. But I really like the property. How?
Can be done.
Oh, so that's mean that the loan shortfall is another 375,000. Of course, if I dump in 500,000, I can buy the property. But if I want to leverage on loan, my loan shortfall is 375,000. But maybe this guy had a scenario that, I only have 350,000. So
As a spare?
yeah,
As a spare lah.
spare.
No need to do down payment for the house.
Yeah, but I don't want to do it to lock into the property.
Yeah lah. 300 over 1,000.
Yeah,
It's
I want to use for some business expansion,
Cash flow.
I do some cash flow, some renovation for the house.
Mm.
Or if I put in everything, I got no money to renovate the house.
Yes, understand.
So I think maybe we use this case and explore whether pledging or unpledging can help this guy. Let's see. Okay, so this is what we mentioned just now. Okay, so 350,000 available.
Yep.
So if you want to look at using our calculator, right, you can see if you were to buy a 2 million property
Yep.
based on the 10,000 income,
Yeah.
if you want to pledge 161,000 into the bank for 4 years, can it be done? 350,000?
Can I?
Can
Can.
Can. So this one soft already lah.
Instead of putting my whole 350 to do the shortfall,
Instead of putting 500,000 the down payment but I don't have 500,000, I'll do 350 But I can do pledging 161,000
so
soft provided he's okay But if he's okay, it's settled. You want to do unpledged 500,000 can?
cannot. Because at this moment of time, my spare cash is only 350.
Yes. But the problem is even to put 161,000, a lot of people also reluctant.
So does it mean the client have to tone down?
So you see is it that you can only use pledging or unpledged?
Got other way?
How about combine?
Combine.
So if they combine, what is the benefit?
Am I able to achieve this 2 million with the amount of cash I have?
Maybe this buyer say, hey Annie, I want to only put less than 100,000 as a pledging amount.
Yeah.
Can be done, no? But here is 161,000. Here, unpledged 500 over 1,000, I also don't have the money.
Yep.
So a bit stuck. So actually, you can do a combine. So let's
Yes.
see what can be done.
Don't straight away tone down the budget.
Yeah. That's why, you work with us, with the right agents to help you, to give you more options, more solution. So definitely this is one of the solution for this scenario. So instead of pledging 161,000, I think the buyer can pledge 80,000, which is less than 100,000, and use 267,000 for the unpledging. So the total funds needed is only 347,000, which his cash is 350. It's definitely doable, but he don't need to use everything. He just need to pledge 80,000 into the bank for 4 years. So 350 minus 80, the buyer still left with 270,000. Enough to renovate the house.
Enough.
Still can buy the
Cash flow for the business.
still can buy the dream home. So actually settle already.
This is nice, Raymond. How come not a lot of people sharing this type of different plans that we can have, we can work out? Because in this scenario, actually, I can see very, very comfortable now. I keep my cash flow. I only need to have 80K in the bank.
And then you can get the dream home that you want, even though it's a 500,000 gap. So actually, it's very doable. But like what you mentioned, maybe there's a lot of consumer, they are not exposed to this kind of financial technique.
Yes.
So that's why we are doing this video.
If let's say you have a similar situation, may not be exactly like that, this kind of income, buying a 2 million, but similar. There have been once you spotted a property that you really like. But because of the finances, without going deeper in for all these financial strategies, and you just decided that you have to drop the purchase, or you actually go and tone down. For example, you spotted a 4-bedroom for your family that is so nice, so matching for what you need, but because of the price, without working out properly, and you go and tone down, buy a 3-bedroom plus study.
Yes, it's a pity lah, I feel.
Yes, then I feel it can be improved. Yeah, it can be improved lah. Speaking to people who have more different suggestion for you, different experience. Yeah, because on the ground we handle a lot of families, direct buyers that is single only, that the income is quite limited. You purchase it as one person. So what are the things that we can help you to look at, explore before you even decide whether that is your final unit that you should go for?
Definitely today we're just showing the single buyer. Of course, there's also a scenario that is a couple also have this kind of scenario. We also can activate this kind of financial technique lah. This is also only one of the financial technique that we have that I think is very doable for a lot of people as well. Of course, there's also other scenarios. If you have any other question on any financial calculation, or there's some slight difficulties to get the dream home that you want, I think you can feel free to contact me or Annie.
Yep. Just like in a DM for us, no problem. Or you can reach us at our number here. Yeah, no issues at all, no obligations. We can quickly run through for you with the calculator that we already have in place. It's pretty accurate. It gives you a clarity. How can you actually enter into the best property that you want to?
So this is Raymond here.
Annie here.
So
we'll see you in the next episode.
Yeah, we'll see you soon. Okay, bye.